Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, June 14th, and we've got a bit of economic news releases scheduled for today. So let's jump into the weekly jobless claims. Last week we had 393 reporting. The forecast was the number would drop a little bit down to 376, and it actually went upwards a little bit, about 386. So not obviously good news. So more people are applying for unemployment. Next item to note is the CPI, or this Consumer Price Index for May. This is the inflationary number for the consumer level, so these are important indexes that we have to really keep an eye on. So back in April, we had a 0%, and we figured it would drop down to about 0.2%, and it actually dropped down to 0.3%. But once you wipe out the food and energy, which creates the volatility, we had the core CPI, and that's really kind of the gauge that we look at. So we had 0.2% increase for the month of April, and then we figured that would continue at 0.2% for May and basically continue. So it came right in line where we had with the inflation. So basically, inflation showing that it's relatively tame. It's not getting out of hand. It's not out of control. It's just keeping at a moderate pace right now. So sorry about that, folks. That was from yesterday. So now we're just going to jump over to the headline news. And with stock markets up right now, a lot of it has to do with the next slide, next one here. But it's right now we also have the U.S. deficit showed an increase up to 137 billion. So basically, I mean we're negative 137 billion with a deficit when previously we reported at 118 billion. So obviously the government's kind of putting us more of in a hole, unfortunately. So here's what the markets reacted to: is there's investors still showing some continued speculation, as we were talking about yesterday, with the Operation Twist, that maybe that the Fed will start continuing it again. They don't really anticipate it will be probably brought up at this month's meeting with the Fed, but maybe afterwards at some point it will probably be something that will happen regards to continuing it, as we're seeing economic data showing a turn that things are worsening again. So to stimulate, they think that the Fed will probably do something and maybe like continue the Operation or Twist program. And another item to note is, of course, we got Europe. So what would be a day without Europe? The bond yields are rising for Greece, Spain, and Italy. So those are the three countries that we've been really kind of keeping our close eye on. Greece will be important this weekend. Investors probably, you might see some movement tomorrow with the in anticipation for the elections, because Greece has their elections on Sunday, and those elections could potentially be a situation where it's going to determine if Greece is going to continue remaining in the European community or if they're going to be basically exiting. And obviously, exiting is what will be their most investors' biggest concern. Spain and Italy, of course, are kind of getting the snowball effect from Greece. So every time Greece is getting something negative, and because they're kind of being put in the same corner fairly unfairly, their debts being basically their cost of debt is going up as well. And then on top of it, to further the concerns of investors, is that Moody's just went ahead and cut Spain's rating a little bit worse again on that. So it's a never-ending battle right now in Europe. So we'll just jump over to the bond market, see what interest rates are doing today. And as we saw, we had a nice little rally yesterday. We're still shy of the 10-day moving average, and then still kind of going in the trading range in a sideways pattern. We did start the day off about 3 basis points from where we left off yesterday, and we're currently down about 3 basis points. So we're not too bad, but it's rates are probably about the same, depending if the lenders went ahead and gave a price improvement yesterday, as it looked like a lot of lenders did, as I was seeing a lot of improvements were coming across. So right now we're probably going to be very close to where the improved pricing was yesterday. So we're probably, because we're kind of the same line, it's not a huge difference from that line. So you'll probably see that come out with the interest rates about the same. All right, folks, have a wonderful day. I will see you guys tomorrow. And again, stop by Mike's Daily Market Report, subscribe.